If you had £100,000 right now, where would you put it? Property, gold, crypto, or something else entirely? Because here's the harsh truth. I love property, but the world that made people rich through property over the last 25, 30 years, well, that world may not be the world we're heading into right now. Just take a look at this graph. The blue line shows average percentage house price growth. The red line shows average mortgage rates. The red zones I've coloured in are where mortgage rates were higher than house growth. And the green zones that I've coloured in are where house prices grew by more than interest rates. So in short here, the green zones are where it was easy for people to make money through property. The red zones is where it was far harder because the rates of interest were higher than how property was going up in value. So we need to remove this notion that the past reflects the future, because in reality that often isn't the case because of the fact markets move in cycles. Red, green, for instance. So today I'm breaking down exactly how property, gold, Bitcoin have performed, what £100,000 5 years ago would be today, how that compares to then the 5 years before that and even the 10 years before that. So that hopefully what I'm showing you is you'll be able to see the trends around what investments have given stable returns over that entire period and which haven't. I'll go through where I see there are risks, what I personally think about wealth building right now. No hype, no clickbait, just the clear data for you to look at and to keep informed with. And in case you're wondering why you should even bother listening to me, well, in 2013 I founded 2 national property businesses that I still run to this day. British Homebuyers, a UK-wide home buying company, and British Homesellers, a UK-wide, nationwide sort of estate agency. And between those 2 businesses, we've been involved in over 14,000 property transactions worth over £5 billion. So as I've been building those businesses, I've seen the booms, busts, and everything in between, whilst making a success of those. And right now, we're in one of the most complicated markets I think I've ever seen. I invest in property, the right property opportunities, of course. But of course, to put all your eggs in one basket is not necessarily a good thing, and it's certainly not what I do. So what if you had invested £100,000? Let's rewind 5 years. If you invested 100k in 2019, here's roughly what it would be worth today. Bitcoin at £620,000, gold at 153,000, the FTSE 100 would be at 143,000, and the S&P 500 at 185,000 pounds. And property, well, property based on having a 75% mortgage would see your capital grow to 205,000. Adding an extra 15,000 if it was rented. That's based on a 5% rental yield. So look, yes, of course, Bitcoin has completely exploded. Gold has quietly beaten property, stocks, and most safe bets. Property, thanks to leverage, and if rented, the rent has grown, but nowhere near the levels I think people often assume. It's not massively outperformed everything. For instance, if you had bought a property investment for cash, rather than £100,000 becoming £220,000, it would have turned into £146,750. So much the same as what investing in gold or the FTSE 100 would have given you. Nowhere near Bitcoin and the S&P 500, but importantly, buying and managing property requires clearly a lot more effort than just clicking online and buying index funds or crypto or gold. Now, you might be thinking, well, Will, this is looking at the last 5 years. What happened the 5 years before? So 2014 to 2019. Well, if you invested £100,000 in 2014 and held it to the 2019, 5 years later, you can see how property with a 75% mortgage and rented clearly became a clearer choice against certainly the likes of the FTSE 100 and gold, but much the same as the S&P 500. And just take a look at Bitcoin. Clearly, hindsight is a wonderful thing. And let's go back even further to 10 years before this, 2004 to 2014. All of a sudden, you see here gold was a big winner, with leveraged property being a far, far clearer choice against all the other investments we're looking at here. So what are the patterns you notice from this? Which investment class has given the most stable returns? against which has given us the highest return, probably the most unpredictable returns. And of course, we're looking at average house price increases, and we're looking at index funds like the FTSE 100 and the S&P 500, which offer you a slice of a collection of UK and US businesses. You can outperform the property market by buying better high yielding properties in growth areas, for instance, and you can outperform in index funds by buying individual stocks, for example. So what does this all tell us? Well, when you zoom out, three things become very clear. One, property rewards leverage and long-term rental income, but only if you get your buying decisions right. So without leverage, property struggles to beat inflation. With leverage and solid tenants, you can build wealth, but you need to manage those properties, repairs, cover void periods. Property is not passive, it is a business, and like any business, you can systemize elements at a cost. The next, crypto and Bitcoin deliver wild, almost lottery-like returns, but extreme volatility. And yes, £100,000 in Bitcoin at the right time would have made you millions, but very few people timed that correctly. And there have been huge downsides. It has dropped 50%, for instance, at points and then gone back up. So crypto is like rocket fuel. You can make and save money or lose most of it. But if you hold long term, it seems to be a good bet. And stocks and gold quietly reward patience. Gold acts as inflation protection in certain periods, but flatlines in others. So it's really another long-term hold. Index funds, especially the S&P 500, have delivered stable growth, particularly since the 2008 crash. And you can invest in them globally without debt, tenants, or maintenance. And frankly, passive investing in stocks or gold requires very little personal effort compared to property management. So the real truth is property, of course, still works, but not in the way it did for previous generations. If you simply bought your own home 30 years ago, you got wealthy almost by default. That era has changed. Today, you need to actively add value, buy below market value, refurbish, manage well, and focus on cash flow. Pure capital appreciation won't bail you out anymore. And diversification matters more than ever. The past 20 years taught us you don't need to pick one asset class. Having some property, some equities, some gold, maybe even a little bit of crypto allocations protects you from being entirely wrong. I don't personally go 100% into anything. So where would I invest £100,000 right now? If you gave me £100,000 today, I split it like this. And this is just my personal logic. This isn't advice. This is what I do. Property still forms my core, but I'm careful with it, what I buy. Equities and gold are my quiet compounders. And Bitcoin is my high-risk asymmetric bet. And I always, of course, keep cash for opportunities when markets might wobble. My final thought on this, the world of just buying property and waiting is over. If you want to build wealth over the next 20 years, you have to think smarter, diversify wider, and play both attack and defense. What about you? Where are you putting your money right now? Are you more property heavy or stocks or crypto heavy, or just stacking cash for now? Drop a comment below. I reply to every single one of them. I actually really enjoy reading them. I feel like I learned a lot from them. Hit like and subscribe if you want to help me out, and I'll see you in the next one up here.